Hey everyone, today I just want to quickly go over this OHLC indicator. And basically the premise is if you're looking at a candlestick, you know that there are four main points: an open, high, low, and close. But with ICT, especially when you're factoring in some daily bias, if you're expecting expansion in some direction, then you should be looking for signs of accumulation and then manipulation, where we create one end of the range or pretty much a wick on a higher time frame, and then expansion in the other direction. So I just wrote this very simple indicator just to be mindful of the higher time frames. It's currently tracking the daily time frame. And so we're on a 2-minute chart right now, but obviously this candle is forming throughout the day. And so we're being mindful of the range it's creating on both sides and where we might be willing to see some expansion. And depending on what side you're looking for expansion, you would be looking at the opposing side to create a wick to indicate that manipulation. So if we were expecting expansion to the downside, then we could look for manipulation above the daily opening price. And if our higher time frame thesis supports that idea, then we can look for areas to get short, ultimately targeting that expansion to the downside. And the same idea works on, a 4-hour chart as well. If we just pause this and look at a 4-hour chart. So I just found this London and New York session indicator to show us when the 4-hour candles are within the New York trading hours. And this alone is a good exercise to see how these candles expand during the New York session. So on a 4-hour chart, we really primarily have two candles that we're worried about. We have one that opens at 10 a.m. and closes at 2 p.m. Obviously the markets close at 4, so the second candle is only really active for the first couple hours. But applying those same principles, you could consider the 4-hour candle as one you want to be aware of by watching how price reacts to the 10 a.m. and 2 p.m. opening prices. So if we're looking for expansion higher, then we want to see, maybe some manipulation below 10 o'clock open to send it higher for the first few hours of the New York trading session. So on this day in particular, it is Thursday, March 2nd. So we can zoom into that to get a better look. And if we find our 10 a.m. opening price, we can see it was largely choppy. We stayed in this range for a little bit. And obviously in hindsight, we can consider this to be our accumulation. And we have manipulation below the 10 o'clock open and then distribution as prices pushed higher for the remainder of the day. And obviously it's not as simple as just looking for, 10 o'clock open and trading in one direction, because sometimes you have these dojis like this, where there's no clear indication of what end of the range we're heading towards, which is exactly why you want to apply some higher time frame narrative. So for example, for the candle that we were just looking at on the 4-hour chart, what reasons could there be for us to expect daily expansion up? One of those could be that we targeted sell side liquidity right here and ran it by a few points. We also have a small fair value gap in this area from early January on the 4-hour chart. And you can see that in pre-market, we respected that area pretty well. The candle bodies especially respected that area. We only wicked into it and did not close into it. Now, if we drop into a 15-minute chart, we can see we have some minor breaks of structure in here, but nothing too decisive, no real displacement. And then at 9:30, when we open for the day, we start expanding higher above previous highs, leaving behind some more fair value gaps. We have one right here, in which case price did trade through it on a lower time frame, but ended back up, later came back down, and again, price closed within it, but did not exceed it as far as the candle bodies, and then traded away from it much higher. So in a nutshell, that could be one way to find your narrative for, higher time frame expansion. It doesn't always need to be what are you expecting for the whole day or the whole week. That can be a little intimidating, especially for newer ICT traders, but you can kind of start from, intermediate timeframes and work your way up. Because if we're in some area of interest like this fair value gap on the 15-minute after knowing that we swept liquidity on a 4-hour chart, that's pretty much the ICT 2022 mentorship model. Once we get that MSS above these highs, we look for an area to get in. I think in order to get the best results, you want to start from the top down, ultimately starting from a monthly, but depending on your time horizons, maybe just like daily, 4-hour, 1 hour, and then starting to drop into your intermediate time frames to find where your setup occurs. And rather than focusing on something like the 1-minute time frame and trying to make sense of every single price leg, it really does help to start analyzing those higher time frames so that you can form a general bias for the near term future. Again, it doesn't have to be, a whole week or a whole month away from the present moment, but based on, the logic of different ICT concepts, why would we be expanding in one direction versus the other? And that's pretty much why I want to create this indicator, is because I want to show in real time that the current price action on lower timeframes is parent to what's happening on the higher timeframes. And generally speaking, it's always good to keep those higher timeframes in mind, how those candles are forming, where we're expecting manipulation and distribution, and only then do we look into the lower timeframes to see how we could take advantage of that and catch part of the move. But anyway, the link for this indicator is in the description, or you could just go to indicators and type in OHLC and you should see that here. Add it to your chart, play around on different timeframes and see what works best for you. I'm usually just watching the daily candle here, sometimes the 4-hour, as I mentioned. I hope this was a clear demonstration of how it could be applied. If you have any questions, please feel free to leave a comment. That's all I have for now, and I'll see you in the next one.